The views expressed on this podcast are those of the participants, not of Reuters News.
And when OpenAI released ChatGPT back in 2022, there was a sense that China was falling behind in the AI race. And I think that really was a bit of a wake-up call for a lot of the local players to step up their game.
The global race to dominate the artificial intelligence market heated up again this year when Chinese upstart DeepSeek revealed its low-cost large language model R1 in January. Unlike in the US market, where OpenAI and Anthropic and a few select peers are ballooning in size, China is seeing growth in a large swath of tech companies, big and small, all keen to roll out bits and pieces of artificial intelligence technology. But the bigger question is perhaps how this impacts the chip war. Trade tensions between the US and China have never been higher, and the administration of President Donald Trump is continuing to pull back on availability of the most cutting-edge silicon used in training and running AI models. Furthermore, AI is the big story in US equity markets. How worried should US tech companies be about this seemingly cheaper and more plentiful competition? This and more is the focus of this week's Viewsroom. Welcome back to the Viewsroom, the weekly podcast that invites you, the listener, into a lively debate with Breakingviews columnists about the biggest stories of the week. I'm your host, Jonathan Guilford. China is muscling in on the AI party. News of DeepSeek's technology sparked a surge in the country's tech companies, just as much as it cut back valuations, if only briefly, for the likes of Nvidia. If China is able to provide a much cheaper alternative to ChatGPT, how worried should US companies be? Is there a sense that China may just end up doing things cheaper and better, as it has in some other markets? Fortunately, I have two experts in AI, one who focuses on China and the other the US, with me today. Robert Siren, who's based in our New York bureau, and Robin Mack, who's based in Hong Kong. Rob, welcome to the Viewsroom.
Good to be here.
Rob, if we could start with you. So obviously the US has gone to great lengths to limit China's access to the most advanced AI chips or the equipment required to make them. What does this development tell us about where things are in the chip wars?
Well, a bunch of stuff. I mean, the first thing is that the walls are porous. You can actually buy, servers with NVIDIA's latest chips in China, and the price isn't that high. The premium isn't that much higher. The other thing is that, with the rise of DeepSeek, one thing DeepSeek showed is that there was a question over the past few years, there's been a simple formula. If you make systems bigger, you have more chips, add more data, add more parameters to the AI. What happens is the AI becomes more powerful. And then we started to hit those limits last year. And what DeepSeek showed is that so there was that in the background, and then DeepSeek showed that they were able to become much more efficient in using their chips, and also because that's happening. That means the importance of NVIDIA chips becomes a little less. Also, AI is moving more towards inferencing rather than training. So that means instead of actually training the systems, it's more about running the systems. And in that, there's more competition because you can use NVIDIA chips, you can use other types of chips for the inferencing. And so, add that all up, and what does that mean? It means that there's simply more competition, at least for NVIDIA. And it means that, if there is more competition, if it's easier to make the cutting edge systems, then the prices you're able to charge for them will be simply less.
Right. And I kind of wonder, Robin, turning to the picture in China here, it feels like what Rob is saying about, the barriers will come down, we'll see a lot more competition. At least from afar, it really looks like that's happening. It seems like China is awash with AI companies at this point. I would imagine that's a certain element of just being born out of necessity because OpenAI and its ilk don't operate in China. But how much of this do you think is a result of this kind of technological breakthrough that we're seeing at DeepSeek?
I mean, keep in mind, China has been investing a lot in AI well before DeepSeek emerged, and even well before OpenAI emerged. So we've seen a lot of really big companies like Alibaba, Tencent, invest billions to build out their cloud infrastructure, to train their models. So it's AI has been a very hot buzzword for a very long time, and we've even had the Chinese AI dragons emerge at one period.
The Chinese AI dragons?
It
I'm
didn't.
sorry.
Yes, yes. There was 4 companies, including Megvii and SenseTime, that basically were at the forefront of China's AI push, but it never really lived up to the hype. And when OpenAI released ChatGPT back in 2022, there was a sense that China was falling behind in the AI race. And I think that really was a bit of a wake-up call for a lot of the local players to step up their game. And when OpenAI cut access for Chinese developers, that was also another big wake-up call. So starting 2024, you've really seen a lot of the Chinese companies make some real progress, including DeepSeek, because that was around the time that they started releasing some of their open source models. But you also have Alibaba and Tencent. They have open source models that consistently rank very high globally, and on some metrics perform just as well or even better than their Western peers. So the whole competition in China, I think it's quite a very familiar story for those that have been following the China tech. So that's and there are good sides and downsides to that. I mean, it's like you said. I mean, it's really just sparked a huge frenzy. On the investment side, a lot of people are very excited about it. But at the same time, there's a huge price war playing out in China as well, and that's starting to spread abroad. With DeepSeek cutting prices, and I think now a lot of their global competitors, not just Chinese competitors, are having to cut prices.
And yeah, that's so interesting because it kind of reminds me of what you've seen in a couple other markets, especially I cover automotives. So Tesla had this, initial big lead in the electric car market. And then you kind of saw the rise of China story and really, really brutal price competition there. I kind of wondered, what does, I guess, DeepSeek success and whatever we're seeing happening with pricing tell us about the AI business model? Is it actually possible, if you can build a passable large language model without all the chips and computing power and so forth, what are the implications for OpenAI and I guess just the rest of the market here? Because there's a ton of stuff that feeds into questions about how much people are going to be spending on AI, right?
Absolutely. I think DeepSeek has shown that you can train these AI models for a fraction of the cost. And also in terms of inferencing, I think there is a very critical question now that everyone needs to ask, which is how much chip demand does the world really need? And if DeepSeek can train and inference, all its models using just, 2,000 NVIDIA GPUs, then is what Alibaba or Tencent, trying to amass in their chip pile, is that necessary? So I think that's a question that everyone is going to be wondering going forward.
Yeah, and for the American side, for the hyperscalers, they've made just absolutely gigantic investments, and at least part of them are predicated on the idea that there are going to be some attractive margins in AI. That's up to question. If there's a lot of competition, you'll have price wars that may spur demand, but at the same time, if there are a lot of these things out there, the margins probably aren't going to be awesome. The other thing which we haven't really touched on is, there have been a bunch of trade wars now launched, and if there are, a lot of the capex investments being made by a few American tech companies, you have to wonder, okay, will Europe be happy with a data center with all the European data being over here, or other countries being, with their data abroad? And so that may encourage countries around the world to say, okay, we have to have the data center within our country, and what does that do for capex intensity? Probably makes it go up, but on the other hand, maybe returns go down. So it introduces a ton of uncertainty.
Right. And it's interesting that you mentioned the trade war aspect to this, because obviously we have some pretty big announcements on that front this week. US President Donald Trump has upped tariffs on China to 20% across imported goods, adding on to various other measures. I mean, Robin, do you have a sense of what Xi Jinping's views on the sector are and kind of how that plays into negotiation and jockeying with the US and elsewhere?
I mean, I think for the China tech sector, what matters a bit more is the chip restrictions, more so than potential trade tariffs. So the chip restrictions have been a huge impediment and has really hampered progress for China's AI. And I think there is a sense here that that's not going to change. And if anything, the chip restrictions will only get tighter, just given the way that things are going between the US and China. In terms of, how the government sees, the tech sector and AI, I mean, it's a very domestic issue. And there are lots of indication and signs and policies that, the government intends to fully be, in control and in the driving seat when it comes to regulating AI, and not just for censorship reasons, but also because, for example, it wants to develop industry standards. It's the first government in the world to regulate algorithms and come up with AI regulations. So I think, the view from Beijing is that this is a technology that we want to control and we will regulate. And it's also critical that China is self-sufficient in this area.
Do you think we are seeing signs that there's a real sort of indigenous chip industry that is growing up here that could be a challenge to NVIDIA? I just ask because I don't even have a good sense of who the players are or how sophisticated they are or whether we've had recent news about them making kind of advances similar to what DeepSeek did on the software side.
I think so. I mean, Huawei is leading the forefront of, China's chip progress. And, they have shown that, from a design perspective, they are able to design chips that are probably just as good as NVIDIA. But the biggest hurdle is the hardware and chip making equipment that it can't get access to. And, there's been a lot of progress made on that front too. So Huawei has redesigned its chips, so it's a bit more efficient. Maybe it requires less computing power. Even a lot on the software side, companies like DeepSeek are finding ways around the chip restriction as well. So it is, there's still a long way to go, but China is making progress and it is catching up. And I think, the belief here is that it's not a matter of if, it's a matter of when.
I'm so curious about that because, Rob, I wonder if you have a take on this on kind of, I guess, the US view on what the moats are. Maybe that, this will ensure, let's say, Western technological supremacy on the chip side. Like, do you have a sense of kind of what those are seen as being and, maybe how durable that is?
Yeah, I'd agree with Robin that, China's just pouring money into chip making. And we've seen this happen this game before. We saw it with, the rise of the chip industry in South Korea. Countries can catch up if they pour a lot of money into, scientists and sending people to grad school and developing chips and forcing their own companies to use their chips. So it'll happen. It's a question of when. In terms of how durable, you have to look at various moats. Part of the reason why NVIDIA chips are so common is because the software as well that, it's become the de facto standard. So for a lot of people around the world, when they start up, they're going to start using NVIDIA chips just because that's what everyone else uses. But on the other hand, that could provide an impediment in China. It could, because, it may be more efficient to be like, hey, let's not use CUDA. Let's use some other, locally grown version. You maybe squeeze some efficiency gains. Like that was the whole story behind DeepSeek, right? Is that they had limited access to chips or at least part of the story. And so they were more concentrated on wringing out as much efficiency out as they could out of the system. And then, just in terms of capital, if anything, I would expect Chinese chip companies have more access to capital than Western companies because it isn't necessarily just an economic decision. It's also a national security decision.
Right. And, we've been going back and forth and mentioning the DeepSeek efficiency breakthrough. One thing I do wonder is we had a big market freak out, obviously, when DeepSeek first released its R1 reasoning model. Information in that initial paper implied the huge efficiency gains that we're all talking about, the run counter to the narrative that everybody needs to spend many, many billions to make AI work. And I think, Robin, if I'm right, just last week, the company followed up with another paper that included some more color that made the claims, if anything, like even more astounding. I know you took a quick look through that, obviously with the caveat that none of us here are semiconductor engineers. I mean, do the numbers make sense to you, or at least do they imply things that seem radical enough that the scale of the reaction makes sense?
It's a hard one to answer because I think you can argue both sides. I mean, on one hand, they did release some pretty impressive profit margin numbers, but that was all based on a theoretical revenue. So how much sales they can generate if they were able to charge the prices they wanted to charge. And based on that, I think they had something like an 80% plus gross profit margin, which is very impressive. And I think it does confirm what a lot of people thought in January, which is that, this doesn't need you. There is a business model out there. You don't need to be spending so much money. There can be profit. But even DeepSeek acknowledged that this is theoretical revenue and that they in reality do not charge as much. And in fact, they actually offer discounts. And there is a wider question of if they do charge what they wanted to charge, will they even have this much revenue to begin with or this many users? So there's that. But yeah, I think it really did. I think it was significant in the sense that it just confirmed a lot of what people believed about DeepSeek in January, which is that, the business models really need to be examined going forward.
Another interesting thing about that, with all your caveats totally in mind, the fact that they think the gross margins could be that high, it also implies there's a lot of room for cost cutting, right? In other words, when, if other companies get in here, the prices are going to totally drop. And that may, maybe that'll spur adoption.
Right. And I guess that's kind of the final thing that I wonder about, which is just whether the market, even after all of the drops and the swings and the seesawing that we've seen, whether there's a sense that investors are actually beginning to kind of take this into account and adjusting their views in a coherent way with that. Rob, on the US side, we've seen, OpenAI working towards a fundraising round. We've seen Anthropic reportedly hit the kind of new valuation milestones. Like, when you think about the conversations that you're having with folks or kind of what you see in the market, do you think there has been a meaningful kind of investor adjustment based on, I guess, just like processing what it is that DeepSeek has done here?
No, not really. I think they are still, there was that momentary freak out, but then there's also kind of the desire for it to keep on going on. And you have to also step back and be like, okay, so not everyone is doing the same thing. Like, so a lot of companies, like, big companies like Microsoft, they're also selling cloud services. So, even if it becomes a, commoditized AI, they'll still make money off of it, or Meta will do as well. So it's kind of hard to say, okay, well, all of them are banking on one, kind of dominant AI thing, as was the case more the case like last year. So there's been some adjustment in business models, but in terms of valuation, it's still, I think everyone is still kind of hoping for a market which isn't here yet. And that could present problems, because, okay, right now they can all afford the CapEx figures, all the big US companies, but they're growing so fast that it becomes a bigger and bigger swing every quarter.
Right. Does the story seem sort of similar in China, Robin, or do you think investors are taking a slightly different view?
I think it's a slightly different view. So China tech stocks have been completely beaten down. For the past few years, we've had a regulatory crackdown. We've had the pandemic. So the valuation multiples were extremely, extremely low. And then when DeepSeek released its model, I think investors were really excited again about China tech and what it could do. And I think that led to a re-evaluation of a lot of the valuations. So we've seen, Alibaba's stock go up, I think more than 50% this year, as well as, the Hang Seng Tech Index as well has rallied quite a bit since January. And this was all down to DeepSeek. But having said that, I mean, Alibaba is still trading on, an earnings multiple well below its historical average. It's still its market cap is still half of what it was in its 2021 peak. So it's all relative, I think.
Right. So collar-tugging optimism in the US and trying to get out of the dumps in China. It's interesting kind of split there. But anyway, thank you so much, Robin and Rob. This has been fascinating. And I'm sure we're going to have you back on to dive through the inevitable next big thing that comes down the pipe in 2 weeks. So thank you so much for joining us on the Viewsroom.
Thanks, Jonathan.
Thanks for tuning in. This podcast was produced by Oliver Taslich in London. You can listen to a new episode of The Viewsroom every Thursday on the Reuters app or your favorite platform. And don't forget to tune into our sister podcast, The Big View, every Tuesday, as well as other great podcasts from the Reuters team. If you like what you heard, please follow The Viewsroom and let us know what you thought. And check out our views on the biggest stories in business and finance every day at breakingviews.com and reuters.com.